Welcome back to the Real Estate 401k show, where I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. And I'm not necessarily apologizing because we don't apologize for anything on this show. But for those of you that have been sticking around with us, as you know, we moved into a new studio and we're just working on the lighting.
It's coming together.
It's
We'll
coming
get it
together.
right.
We'll get it right.
Yeah.
So the last couple of weeks might have been a better show for you. Harder to see me. So
I'm sorry you have to see him better.
And I told Ryan, one rule: do not wear black shirts because in 2 weeks in a row, bro.
No,
I wore
look
red.
good,
I
man.
wore. I thought
No,
I wore
last
red,
week, last week
red
you
or
wore
black.
black.
Red or blue. I thought is what I wore.
I don't-
Who knows?
I don't know. Whatever. I'm wearing black today, so hopefully our lighting's a little bit better. We've made some adjustments.
We're working on it. So be patient with us. If you're watching it and go, boy, these guys aren't very professional. Look at the lighting. We've never claimed to be professional.
Other than in real estate, right?
Other than helping you build wealth in real estate,
yeah.
that is where we shine.
Pretty darn good at that.
All right, so you're going to want to text the word option to 623 AZ Recon. That's the word option to 623 AZ Recon, because you may fall into one of two categories. The first category, we're just seeing. I wouldn't say it's jumping up exponentially, but it is jumping up, and I think it's an indication of what is to come. I do not think, because we're going to talk about delinquencies, people getting behind on their mortgage payments, which at the end of the day, worst case scenario, does result in a foreclosure. But we're seeing, because of a lot of different circumstances going on in the economy and inflation, and this is by no stretch of the imagination a political show, so we're not going to get into opinions. It just is what it is. You know, people are having a harder time, or a lot of people are having a harder time paying their mortgage payments. And we have seen over the last year an uptick of nearly 1% more foreclosure or delinquencies in this nation. And we're seeing an uptick in short sales, and we're seeing a uptick in foreclosures. And I think, Ryan, it's going to continue to increase. Again, I do not think it's going to be anything like we saw in 2007 to 2009. I think that was an anomaly for a variety of other reasons. But there are people who are behind on their payments or know someone that's behind on their payments or wondering how they're going to make their next payments, and you need to have a strategy.
For sure, and I think that we need to look back at the most obvious last time that we saw, any major upticks, and that was in 2008, right? The Great Recession, and that pretty much went on through 2011, 2012-ish. But one of the big writings on the wall was irresponsible borrowing. And some would say some predatory lending.
It was absolutely predatory.
And there was a ton of adjustable rate mortgages, ARMs, and
option arms,
and there was ninjas, and there was Ninas, and there was no income, no assets, no income, no
I got
job.
to name my own loan. Like I would tell my lender, this is what I want to do, and they're like,
Yeah,
well,
no
that's a 3-year option, but what name? Fill in the blank. What do you want to call it?
Right. Not to mention, Mike had never made a payment on anything.
So
before
there's that.
Yeah, you can have a loan.
Yeah. Basically, all you needed was a pulse,
Yeah.
and an alias, and that was about it. And so, because the majority of these are coming down from folks that were either paying way too much during during our recent boom, and then either refied over into a higher rate or bought at a higher rate, and so there just hasn't been the numbers from those times that are really going to reverberate now to give us the same type of outcome that we had back in 2008, 2009. And I don't know if you recall, but one of the big, huge indicators of or beginning of the collapse was all the banks just stopped lending.
Mm-hmm.
And it was almost like they wouldn't even lend to A+ paper.
Yeah,
it was hard to get A+ paper through.
Right. They wouldn't even write A+ paper. You had to have 20% down. You had to have
mortgage insurance wouldn't insure anybody.
Right. And so lenders were just not writing, and they're still writing. Matter of fact,
sure.
We're
coming up with more programs,
with more creative ways to make sure that people, responsible homeowners, whether it's for investment or for primary or secondary, they're still lending. So we haven't seen that, that have any crazy movement. So that's good, because the people that are struggling are usually struggling because they either overextended themselves, or maybe they had a job loss, or something like that. But they're going to rebound pretty darn quick.
I feel like it has a lot to do with just the overall inflation of everything. I mean, a lot of these people, bought their homes a couple years ago, but we've seen prices on
Everything.
all goods, everything. Just, it's crazy what it costs to have somebody come out and trim your tree now. It's crazy on what it costs to just anything. I've just been blown away by the cost of what things are running right now. And I feel bad for homeowners because, you have a maintenance cost that you have to do. I feel bad for Mike. He can't do anything.
Yeah.
So he has to have everybody come out and do it for him. So the costs are much higher for
What
Mike's
did I do?
household.
This is we're off to a rough start.
Hey, at least
man.
you're here. At least you're here. Yeah, it's not on the lending side anymore because we have all the regulation and the quality control that comes along with it. And not to mention, like, Fannie Mae and Freddie Mac are auditing every single file these days.
And don't take, and also keep in mind, and especially for people that currently have a mortgage, where we're seeing the increase outside of those that might have had an adjustable mortgage is, again, we talked about it a couple weeks ago, insurance premiums.
Oh my goodness, yeah.
And property taxes,
Property
right?
taxes.
And so your basic mortgage payment itself, your PI payment is not impacted. That's the greatest thing. That's a great thing about getting a 30-year fixed mortgage. But you can't control property taxes, and you can't control insurance. And,
To an
and
extent.
insurance is killing people right
It's
now.
killing people. And then you're not only are you short on the insurance, so you're getting a new insurance policy that's more expensive, but then you have the shortage from last year when they had to pay that policy, so you're having to make up 2 times the difference. And yeah, it's rough on people.
So our insurance guy, Brandon, who you introduced me to, right? He actually sends me an email the other day. He goes, dude, congratulations, man. He goes, I actually, on this property, your insurance went down.
What?
And I'm like, crap, I forgot to tell you, we sold that the other day.
Oh, dude.
He goes, I guess we gotta go through the cancellation process.
Oh, dude. Well,
Wow.
so I mean, the other approach is, because it's talking a lot about multifamily in here as well, is rent rates did go down.
Oh,
And so if you were just kind of haphazardly buying investment properties and you didn't have a model for what that looks like, then you could have been one of those that are suffering. And I've always just had it a rule of thumb, no matter what, I'm not buying an investment property unless I have 6 months reserves in there. And so if that wasn't part of your model during that time, or even now, then you could get hurt. So it's one of those things where we love to sit down and talk with everybody about what that investment model looks like. It's not just about passive income. It's about all the 4 pillars of how we make money. But if you're going to walk into it and play with the big dogs, then you've got to be prepared for what's going to happen in the market. And sometimes rental rates go down. They're going to go back up.
Yeah.
But for right now, they're significantly lower than what they were 3 years ago.
All right. Well, if you are unfortunately delinquent on your mortgage payment, behind, or you have a family or a friend that's behind on a payment, or you're just wondering what's going to happen because that may be me really shortly here because I'm having a hard time scraping up the money to make my next mortgage payment. There are options for you. And we want to discuss those options with you. All you have to do is text the word option to 623 AZ Recon. That's option to 623 AZ Recon. All right, Ryan, I want to just kind of quickly dive into some of these options because a lot of people, and when you're behind in your payments, the phrase ignorance is bliss is probably not the best phrase, but there's just a lot of us, if I don't know, everything's going to be fine. And when people get behind on their payments, there's a lot of embarrassment. They take a little bit of hit on their pride. They don't want to talk to anyone, and they shut down and just let the entire foreclosure process take its course. Great, I might be in this house for 6 months and I don't have to make a payment or so forth. Not understanding like the true ramifications of what a foreclosure does to you, does to your credit, how long it's going to take you to possibly buy another home again. And really, we have a variety of options to explore, but the message is talk to one of us. We will help guide you through these options. And there's a few solid options. And I think the worst thing that you could do is just let your house go to foreclosure and not talk to an expert real estate wealth manager.
I would have to say that on the optimistic side, I think that people are a little more savvy now than they were during our last downtick, because all the different loan mods and all the different options that are out there
didn't exist.
They're Japanese, or they just didn't exist back then. And so a lot of that infrastructure has stayed in place just as a backup plan in the event of. And so it's been a heck of a lot easier for us to get someone on the phone that knows what the heck we're talking about, how to negotiate out of these foreclosure proceedings so that they can maintain home ownership and not set themselves up for failure again in the future. So again, loan mod is probably the first step that everyone needs to take. But if you're just stuck in between a rock and a hard place and the loan mod isn't even going to get that done for you, what now, right? You need to have a professional negotiator speak with the bank for you. And that is something that we thrive in. And quite frankly, personally, I've been through hundreds of different negotiations with banks, whether it be through forbearances, whether it be for short sales, whether it's or just getting an extension on something so that we can get a little bit more time to scramble something together to put in together contingency plans. There's all the options are out there, and I've even seen some banks get even somewhat creative on some of these things. So if there is an option out there that we haven't explored and we want to create it,
right?
I've had success doing that too.
All right, Justin, how bad is the foreclosure?
I mean, it's absolutely devastating to credit. Also, to future home purchases, there's seasoning periods depending on what type of loan you're looking at doing, and they're extensive. So I would avoid foreclosures. The mortgage would be the last thing I would stop paying, and I wouldn't advise anything other than that. If you're before you even stop paying your mortgage, I would recommend reaching out. Or even having a conversation with HUD. There's HUD counselors out there, and you can Google it. But they're going to basically tell you to get in contact with guys like these guys first, and have conversations and just figure out what's the best route for you.
All right, do not let pride get in the way. Reach out to us. Let us guide you through the process. Let us guide you through what these options look like. Again, all you got to do is text the word option to 623-AZ-RECON. That's option to 623-AZ-RECON. I had one other question from this article. Because what we've also been seeing is adjustable mortgages as interest rates went up. And so I was doing some math. And when I say I was doing some math, the author of the article did the math for me. But if you got into an adjustable rate mortgage and you started out at 3% and now it's 3.5%, now it's adjusted. If it's gone through that full period, it's probably at 6.5%. On a $400,000 loan, that is an extra $800 a month, plus property taxes going up, plus insurance going up, and that can be staggering for a family. So my question to you, if we're in this situation, or maybe this year on my arm, I'm at 5.5%, and there's the possibility it's at 6.5%. When do I need to think about refinancing? Is there a magic formula there?
So not exactly, because it really depends on how much you've paid down in your current principal balance. Because you may go up in your rate, but you may be able to reduce your liability because you've paid so much down on your principal balance. But the other thing I would tell you is, the feds have made a few cuts already this year. There's planning to be one more cut. Now they are talking about slowing down the rate cuts in 2025, just depending on what the numbers come in. What I'm trying to say is maybe being patient too. You might see that arm start to slide back down a little bit quicker here in the near future. So I would just recommend reaching out, giving me a copy of your mortgage statement just to take a peek at it and see what it's based on, what the arm's based on, that is.
All right, then Ryan, in your experience, because you've spent a lot of time on the phone with banks. So if I'm in this particular situation, or I know like next month, at what point does it behoove me of calling the bank and starting the dialogue right now and giving them a heads up?
We always try to front load it, and very rarely do I ever have a bank do much listening until they've seen a loan go 30 days late.
Mm-hmm.
That's just the reality behind it. And so once it goes 30 days late, then they allow me to generally escalate it at that point where I can get an actual negotiator on the phone. Let's just stick with the example of a loan mod. Then at that point, they're going to send over terms of what they're going to allow. But again, you're going to have to go through somewhat of a qualification process. So even if their terms are really advantageous to the borrower, if they still can't afford it, like if they suffer job loss and they haven't found a new one, or the one that they found pays significantly less, and their debt to income ratio still won't cover what the new terms are, then they may not offer that loan modification at all. So they want to see a plan. They want to see what the hardship looks like. They want to see what income, what assets look like, overall household income. So they're going to want to look at all of that. So as far as what time, yeah, I mean, if we can get in front of it and we have somebody over there that says, yeah, our company policy will allow us to start pre-negotiating this thing right away, then great. So
can't hurt.
You definitely want to make the phone call. But the expectation is that once you're 30 days late, that's when we generally start seeing some
I just
traction.
feel like if I call them and just let them know, and they take that position of, hey, we're pretty much, we're not going to really spend a lot of time talking to you until you're 30 days late. At least the next time I call, they're going to be like, we were expecting your call.
Yeah.
Now let's talk, right?
No, for sure. And there has been a number of instances where they've seen, okay, yeah, we have here in our system that you called, 15 days ago and 30 days ago that we saw this coming. So it does make the process go a little bit faster. It does make it a little bit more seamless. But yeah, that just kind of seems to be the trend is that 30 days. But giving them the heads up, it could make it easier. But mentally speaking, though, it does help you because you've swallowed your pride 30 days prior before, and you've kind of let your ego get out of the way, as you put it, and it makes it easier to be a little bit more transparent up front.
And it gives you a lot more time to strategize with us.
For sure.
All right, well, we would love to strategize with you if you are in a situation where you're delinquent on your mortgage, maybe facing a foreclosure, you have a family or friend, or you think that you may be struggling to come up with the money to make your next mortgage payment. Don't do anything rash. Don't ignore the consequences that will be coming your way if you do nothing. We can help guide you through that process. All you got to do is text the word option to 623-AZ-RECON. That's option to 623-AZ-RECON.